Facebook has no one to blame but itself for its IPO mess. That's its initial public offering. That, according to our next guest, Barry Ritholtz of Fusion IQ, market strategist there. Thank you very much. Why do you say that?
Well, look at the process they went through. Look at the decisions they've made over the past few years. It began with the company trading fairly robustly on these secondary markets, which have been hailed by everybody who doesn't know anything about them. The reality is that they're opaque, they're thinly traded, there's not a lot of information for investors, and that's how you take a company that essentially has $1 billion in income and ramp it up to 100x times earnings. You know, you look at what Google went public at or Apple went public at. Companies went at 4 and 5 and 6 times revenue, which was considered pricey. This went almost 30 times revenue. It was an insane, 105 billion was the valuation at the IPO times revenue of 4 billion. These numbers just are absurd. So that was the first mistake. They went with these private markets. They essentially went public before they went public. It was within their ability to say, we're not going to tolerate this, we're not going to allow this. They listened to what their early venture investors drove them to do. They allowed their employees to cash out early. And so by the time they came public, it was really a secondary. They already were public by the time the IPO ran.
And yet, if you looked at the pricing for the shares trading privately in these markets, they were at one point they were trading at $40 a share. So when they initially announced, okay, the IPO is going to be priced at $28 to $34, it kind of gave them some kind of coverage to be able then to come through and do $38 a share, because everyone said, hey, look, it's trading privately at 40. Right. This is a huge discount.
Here's what some idiots paid for the stock. Let's ramp up the whole IPO to that level. Let's really increase the number of shares we're offering. Let's just be thoughtless pigs about the whole thing.
So is this what you're pointing to is greed? This was greed, or?
No, humans are greedy. We're supposed to be self-motivated actors that are behaving.
But this was,
in order.
this
is a whole different level. This is just stupid greed. This is just, there's greed, and then there's greed that gets you sent to prison. There's Bernie Madoff greed. This ain't much below Bernie Madoff greed.
Wow.
This is that sort of stupidity. Look, you want to price something, don't point to the private markets where there are no disclosures, there are no SEC filings, there are no earnings report. I don't even know if there's gap accounting. The first warning sign with Facebook is when they came out, anytime a company comes out with their own metrics and in their own definitions, Groupon is a great example, that's a warning sign. I was plowing through the S1 trying to figure out
the SEC filing.
What the hell is a monthly active user? Are you a subscriber or not? And long story short, by the time you get through this legalese garbage, it turns out that if you click a like button anywhere on the internet, you're an active monthly user for that month, you're an active daily user for that day. So the 900 million users, active monthly users, wildly overstated. How are you monetizing anybody clicking on a like button? You're not.
And meanwhile, you talk about the fundamentals underlying this. I mean, as you point out, Morgan Stanley's own internet analyst took down numbers just ahead of the IPO. The company itself came out and said, we don't really know yet how to monetize our mobile applications, and we may never know how to do this. These were some big revelations that came
and you say in your
cusp.
column, you say, I cannot recall that ever occurring during an IPO roadshow.
Right, and so that raises two issues. One issue is, hey, why are you choosing to go public now if you're coming out with this? And second, I hope Morgan Stanley certainly did not selectively disclose this to people. I don't know, but there's certainly been enough press surrounding that it seems like they have some issues to resolve. I know there's a conference call today they're trying to clarify, but it raises a lot of questions. And by the way, I don't want to understate what an incredible reach Facebook has and how much they've accomplished in 8 years, and they could have come out at a $25 billion market cap and been the success story of the decade.
So let's back up a bit, because one thing Mark Zuckerberg is famous for is saying, you know, we're not so much interested in delivering profits to Wall Street. Was that a very naive thing for him to say, given that the only way you get venture capital money is if they know they're going to get the Wall Street money in the end, because it's this pipeline of the way money flows?
If you're taking VC money, if you're taking investor money, you have to provide for some sort of an exit. And I guarantee when the money was being given to them, what are your plans to get your early investors liquid? Are you going to generate enough revenue that you're going to have a dividend? Are you going to go public? Are you going to get bought by somebody? I would be stunned to learn that they said, we don't know, ask us in 10 years. My guess is he said, well, here are our options, and it was enough to get the VCs to write a check. And again, you know, we've spoken to VCs who were early investors in this. They were astonished at the IPO price. I could tell you that right now, that they were like, wow, that's fantastic.
I bet it is. I bet they're at home counting their money
Yeah,
now.
plus the people who were stunned at the allocation they got from this thing. So,
By the way, that's an old Wall Street story. If you can get it, you don't want it, and if you want it, you can't get it.